The only simplicity to be trusted is the simplicity to be found on the far side of complexity. Alfred North Whitehead. And my friends, that is what we strive for, is to take all of these complicated equations that are depicted graphically on our charts and to hone them down to what works. And what works is very simple. We look at this 200 EMA, which is this line, that's the exponential moving average. It is a line to be found on our charts. We put it there. And if you're below that line, it means you are looking for short trades. You're looking for the stock or ETF to go down. If you're above it, you're looking for them to go up. You're looking to go long. We use the Heikin-Ashi candlesticks, which make price movement very easy to see. And I'm going to put that Heikin-Ashi training at the end of today's video for you. And of course, we use the STC, which is what? It is an indicator that utilizes stochastics and the moving average convergence divergence indicator, one of our favorite over the years. For many years, we use that. Then we use the price percent oscillator. Now we've switched over to something I think is even better, the STC. And we use that when it goes from green to red. We're below the 200 EMA. We look for down moves. When it goes from red to green, and if we were above the 200 EMA, we would look for long moves. And then what do we do when it comes to setting our profit and loss bands? These little red and green boxes. We go over here to the prediction measurement tools. And if we're going down, we choose the short position. If we're going up, we choose the long. And we set our loss band at what? At whatever we see in the box on the average true range. So we zoom in here, and if you look over to the left-hand side, right over here, now when I go back, you will see it tells you what? $6.56. So we put in $6.56 in our box right here. And we stick that right there, and then we double it to 313 for what? Well, that is, of course, what we set our profit band at, 2 times that. And the reason that we do that is what? So that we have a 2-to-1 risk to reward ratio. That 2-to-1 risk to reward ratio means that if you adjust your position size based upon the percentage of loss, that is, if it's a $100,000 trade you typically do, you multiply it by you divide it by 1.63%, and you reduce the size of your trade to account for volatility, and then you look for a 2-to-1 risk to reward ratio. My friends, you only have to win how many times? 4 out of 10. The real key to what we teach about, what we talk about, what we do is minimizing risk and maximizing profit, minimizing loss and maximizing profit, making sure that you know when to cut and run and when you know when to stay in. And it's not hard to do. I encourage you to be with us every day to practice this stuff, to learn it. It's not super hard. It is actually a great deal of fun. Now let's jump into these charts. We see stocks are mixed. S&P down, Nasdaq 100 up, bonds up, gold down, Bitcoin down, at least on the XBTF, which is, of course, the Bitcoin ETF. It's the future Bitcoin, the futures there, closed in 1 month. So we'll talk about that when we get to it. Let's jump first into the S&P 500, down for the day 0.22%. We already took our chunk out at 3.27% profit, and we were happy with that. Did it go down further? It did. Could we have stayed in? Of course you could have. You could have done something like moved your stop up to the profit you were at and then let the rest of it ride. You could surely have done that if you wanted. That is not what I do. You could have put a trailing stop in there. I simply look for a 2-to-1 risk to reward ratio. I follow those rules, and it works pretty darn well. How well did it work over the months of April and May with the S&P 500? Overall, up 4.63% out of 3 trades. The first was 2.59, the second was 4.26, And then we had a loser at 2.22 for a grand total over 2 months of 4.63%. And then boom, what do we have here? We had a nice 3.27% in the month of June. My friends, it's all about following the rules. Okay, so that is where we are as far as looking at the 2-day chart. And the weekly chart, of course, our success multiplier formula is a negative 15. Why? Because everything is down. Now, let's go to the Qs, see where we are there. Qs were up for the day 1.22%. Did that make any difference at all in the STC? No, it did not. And I would show you, unlike the S&P 500, the Nasdaq 100, we had another successful trade, 5.03%. Now, the Nasdaq was our big winner for those 2 months. We had 3 trades, 2 winners, 1 loser, for a grand total of just over 7%. We've already gotten 5.03% for June. That is quite nice. Now, we could have tried to stay in, like I said, running those profits out, but look what would have happened. We would have popped up in the green, and we surely would have pulled that trade with maybe, what, 0.5%, 0.25% of a gain, and then had it roll over and go down a little more and then pull back again. Again, friends, just try this. See how it works for you. Follow the rules. See if they don't work. I've found that they work, but practice trade this won't cost you anything. We're not a stock calling service. We're an education firm. Educate yourself. Now we'll move on from the Qs to, and the Qs is also negative 15 on your success multiplier formula. We'll move on to 20-year bonds. Where are they? Well, they popped over going up. Did we jump in going up on this move? Absolutely not. Why did we not do that? Because we're below the 200 EMA. We're looking for short moves. This last one, we wanted to garner 3.10%. We did not do that. We only got just a measly 0.43%. Didn't lose anything. Could we have gotten out here? Yeah, but how would we have known that? We would not have. So we didn't. But when things turned over, we jumped out. And you know, in fact, it's actually more than that. I did not tag it to the right line. I'll do that later and update you on what the profit actually was. I keep saying 0.43%. I knew it was more than that. I'll go back and check the figures and we'll reset that. But again, regardless, this is what we do. We jump in when we have those STC changes in color from green to red. We're below the 200 EMA. We jump in for the down move. Doesn't work all the time, but again, if you cut your losses, you will see that that is the key to winning. It's almost like playing defense in a football game and winning every time. That isn't going to work in football, but it does work here. It may at first seem counterintuitive, but if you will just experiment, and again, it doesn't cost you anything to practice trade, I think you will see that over and over and over again, 2 times out of 3, you will see winners. Now, that's not in every stock, every ETF, but again, all you have to be is 40% accurate. I want you to go back and take those trainings on the success multiplier formula. I want you to take that training on the always winning method. All those things that we have put out that are available at the channel, you will get so much out of them. And again, I guess the best place to go is to our YouTube. Please make sure to go there and subscribe. And of course, we love thumbs up if you appreciate what we do. It helps us with the metrics and to grow the channel. So we see things ticking up on 20-year bonds. We look at the 2-day. It is, of course, negative. It rolled over earlier in the week, and the weekly, it is also negative. And just by the way, we are well below the 200 EMA on all of these. So we're at a negative 14. The only thing going up is that half-day chart. And it's been going up for a day and a half. And again, not up all that much for the day, 0.32%. So that is where we are on bonds. Still lots of negativity there. What are we waiting for? We're waiting for the green to go back to red so we can short bonds again with something like puts or TBF, which is the single inverse fund, single short of TBF, of TLT rather. Now let's move on to gold. Gold down for the day. Of course, it had been going up for a couple of days, but of course we're what? We are below the 200 EMA. We look at the 2-day chart. What do we see on gold? It is negative. What do we see on the weekly? It is negative. So the only thing that's up is the half day. And of course, it is green here. So we're at a 14. We're waiting again for gold to roll back over and you can short gold again. Didn't quite work this last time. Just did not do it for us. Pulled out with a small loss. Overall, you know, gold has been not really a great performer over those 2 months of April and May. We only did a successfully 1.02%. Our first trade on April the 8th was up 0.6%. We then lost the next trade on the 14th of April, 1.65% loss. And then we had a gain of 2.07% for 1.02% for the month. That added to the Qs, the S&P, and 20-year bonds and gave us that 7+% for the month. So again, we're waiting to see if gold's going to roll back over, might be able to short it. Or what I would love to see is gold take off, blow through this 200 EMA, turn the 2-day around in the weekly, and start spiking. I love buying gold, but not right now. That's where we are on gold. Lastly, we'll go to Bitcoin. We look at the Bitcoin future. That is XBTF. You can find this on any of your trading platforms. XBTF is a recognized ETF, and it charts Bitcoin. Again, not exactly because it is a closed-end future contract, but pretty darn close. It's traded throughout the day, unlike the 24-hour chart that you will see with something like this one. Again, this is the 24-hour Bitcoin. I'm not going to a crypto exchange and putting my money there. If I'm going to trade any Bitcoin at all, I'm going to go long Bitcoin as I have in the past, as I am not doing now. I've done fine on Bitcoin before, but I have not been one of those folks that has held onto it and watched it go from a high of what? Oh gosh, $60-something thousand, and to a low now. Well, let's just look. The low that Bitcoin has hit, we can look up here at the chart, $20,081.04. That is the most recent low. And of course, what was the high? $68,998.88. Whoa. If you held on to Bitcoin through all of this, you must feel really bad as it has now, on the weekly chart, pushed through the 200 EMA. Whew! That is some bearish movement. So where are we now? Again, waiting to see how low Bitcoin will go. And however low it goes, it'll do that. Once it turns around, and I suspect it probably will, but as far as what I really care about, I got to tell you, I don't really care, friends. I'm not really into caring about what any of these stocks or ETFs do as long as they're moving in the direction I want them to move in, and I'm in a trade in them. I have absolutely no ownership over any of this stuff. I try to look at everything in my physical life that way. If I own a house, if I own a car, what does it mean to me? It is an asset. And if I get a good price for it, much more than it's worth, I will sell it. And again, I look at things as investments, as potential trades. I don't do that with people. I don't do that with relationships, but I do it with stuff. And I would encourage you, never be more invested in anything than you otherwise have to be. Otherwise, you're going to emotionalize it and you're going to be stupid. And you know what's going to happen? When you see something that tells you to get the hell out, You don't do it if you've emotionalized it. If you decided, this is part of me, I'll never sell my Bitcoin. And I tell those people, you're foolish because you have literally lost 2/3 of your wealth, at least what you had in Bitcoin. Don't write things down, my friends. Always establish where you're going to get out and get out. Take your loss and just appreciate the fact that you got out. I had a trade today, I'll tell you, my friends, that did not work. It was in the commodity HEAT. I had jumped into it as it crossed over into the green, and it went up for that day and then spiked over going down this morning, and I closed that trade, took a loss, and got the hell out. In fact, I took a 2.09% loss in a real money trade with my own money, making my own decisions, not based upon anything that anybody told me. And again, we're not a stock calling service. We're not a commodity calling service. I've been practice trading these commodities as we move into what I think is going to be a recession and maybe commodity prices spiking. And I have been learning the hard way, again, that these are hard. This is not easy. And we're trying to develop some formulas to help you with it. But sometimes these trades can be spectacular and beautiful, and other times they just don't work. So we're working on figuring out if these are chartable. So far, I've not been able to make wheat work very well. But you live, you learn, you practice, you write it down, you learn from it. The big thing is, my friends, don't keep making the same mistakes. And if you don't write it down, if you don't learn from it, if you don't document it, you will. And that's being a dummy. Okay, folks, that's it. Don't forget, it's the Juneteenth holiday on Monday. Markets are closed. We will be back to you on Tuesday, the 21st. And who knows, maybe I'll give you some little spicy something in the meantime over the weekend. We shall see. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters.